purpose of this video is to talk about the basic ways to record credit card transactions in QuickBooks. I'm going to show you what I think are the best ways. This may not necessarily even agree with your textbook because I think they're a little bit off base on something, but just want to show you what I think is the simplest and most straightforward way to record credit card transactions. So the first transaction we're concerned about is, let's assume you incur a cost and the way you pay for it is with your credit card. You would want to record that new, and then let's go to expense. We'll tell it, who did you pay? What did you pay with? Select your credit card. Your payment account should be your credit card account also. We can give it a reference number. And then we come in here what they call category, but basically that's saying what account do you want to debit. Okay, we do have the option down here for item details. If you purchased an inventory item, you could use this part of the screen. If you are just incurring an expense, you're going to use the category instead. So let's suppose we got a bill in for some advertising expense for $150, and the way we paid for that is we got the bill in and immediately we paid with my credit card. So we would want to record that under expense. The transaction that's going to be recorded behind the scenes here is it's going to debit whatever you tell it to down here for advertising expense in this case, and it's going to credit my credit card payable. Let's suppose you went to Comet Computer Supplies and you bought some computer supplies. The way you paid for it, when you checked out, you gave them your credit card. So what account is this? Well, this is going to be computer supplies. Remember, supplies are an asset when you buy them. They become an expense to you only when you use them up. Let's suppose that was $200. So the journal entry, which is going to be recorded here, will be a debit to computer supplies and then a credit to my credit card liability account. So when you incur a cost and the way you pay for that is you pull out your credit card and you put it on your credit card, you want to record that under expense. The next common transaction with your credit card is when you pay your credit card. Now there is more than one way to do this. I'm going to suggest what I think is the easiest is to go to new, and then let's go to pay down credit card. Which credit card did you pay? This is my Visa card. Whatever the payee is, I don't actually have this entered right now, but it would be Visa otherwise. How much did I pay? I paid $75. When did I pay it? And what did you use to make this payment? What that is saying is, what account do you credit? Where did the payment come from that you used to make this credit card payment? If you paid it with a check, we can tell it what that check number is. So the journal entry that's going to be made here behind the scenes will be a debit to my credit card liability account to make that liability go down, and then a credit to my checking account to make my asset account go down. I believe that's the easiest place for you to record making a credit card payment, a payment towards your credit card bill. I will show you there's another way you could do it, and you could do it under check. Okay, go to new and check. Select the payee. It's going to be coming out of my checking account. What's important here is if you want to use check to make it, and here you're going to select your credit card liability account. Put in the amount you're going to pay. And the transaction that will be recorded behind the scenes now is going to be just the same as we did a minute ago under pay down credit card. It will be debiting Visa payable, which makes my credit card liability go down, and then it's going to be crediting my checking account. So you can either do it under check or you can do it under pay down credit card. I think the pay down credit card approach is probably a little bit simpler. That would get my vote. There's one more screen I want to show you here. And this is what your book had you use for a payment, and I think they are just not doing this the way is best. So let me show you the screen at least, and that is credit card credit. Credit card credit is for transactions that reduce your credit card liability. Now, I think this would be appropriate. For example, remember a minute ago we bought some office supplies? Well, what if we went back and then returned those office supplies because there was something wrong with them and we didn't like them? I think that is what this screen is really meant for. Another possibility might be, what if your credit card company gives you some rewards or some sort of a promotional code, and you've earned some points or such with them, and maybe they reduce your credit card balance by $50 or such. This would be a great place to record that. All right. This is going to be debiting my credit card liability to make it go down, despite the word credit card credit, which I think makes this a very confusing screen for most folks. So this is what account it's going to debit because my credit card liability is going down. It's going to debit Visa payable. If I return some computer supplies, my credit needs to go to computer supplies. Basically, whatever account you debited with the original purchase, if you're now returning that item, you need to be crediting that same account then. So I would suggest only using this credit card credit screen for returns where the refund goes back directly to your credit card, or if you receive some sort of a promo type deal from a credit card company which is reducing your credit card balance. We're not going to be recording either one of those type transactions in this course. So instead, I would like to encourage you to stick with the basics. When you incur a cost and the way you immediately pay for it is with your credit card, then I want you to record that under expense, selecting credit card as your liability account. Whenever you make a payment towards the amount you owe on your credit card, I think the easiest way for you to do that will be through pay down credit card. I think this is going to be the easiest, and there's no need to make anything more difficult than it needs to be.